There are big things happening in the financial ecosystem right now. Last week, the US Congress passed a very big bill called the Genius Act that is going to have some very big ramifications for the entire financial world. Visa and Mastercard are some of the companies that will be affected the most by this new bill. If you follow the channel, you may well know that these two companies are in the rated A portfolio, and they're a very important part of it. Together, they make up around 21% of the entire portfolio. Last week, after the announcement, Visa tumbled about 10% in just 2 days, and MasterCard was down about the same. As you'll see later on in the video, there are other financial companies that reacted a lot better to this news. So clearly, when it comes to the winners and the losers following this new act that the US Congress just passed, the market thinks and investors think that Visa and MasterCard are on the losing side. Even if you don't hold Visa or MasterCard in your portfolio, maybe you hold banks, maybe you hold some fintech companies. This video is still important for you to watch because the changes that were implemented last week have the potential to change the entire financial ecosystem. Okay, let's get right into it. The bill that was passed last week, called the Genius Act, is essentially a bill that provides a legal framework for stablecoins. Stablecoins are a type of digital cryptocurrency. But unlike the popular ones like Bitcoin and Ethereum, stablecoins are backed by real currency. The most popular and most accepted stablecoins are USDT and USDC, and both of those are pegged 1 to 1 by the US dollar. What this means is that for every USDC that exists, there is one US dollar that exists. So you might be wondering, what's the point of these stable coins if they're backed 1 to 1 by real currencies? The point is that they're a lot less volatile than popular cryptos like Bitcoin, for example, and so they make transactions a lot easier. So in essence, they're a cryptocurrency that has the same technology as Bitcoin and others without the implied volatility. So there are a few objectives with this Genius Act. The first is regarding backing requirements. Companies that issue stablecoins must maintain full reserves in cash or short-term treasuries. This means that it's now illegal for companies to just do some financial manipulation and have some extra stablecoins and more stablecoins than they actually have reserves. The second objective is regarding transparency and auditing. Issuers will have to disclose their reserves monthly, and large issuers that hold more than $50 billion in stablecoin assets must undergo annual audits. Another objective is consumer protection. If a stablecoin issuer goes bankrupt, holders gain priority claim to reserves. This is very important to protect the consumers and the users of these stablecoins. Issuers will also be subject to Anti-Money Laundering and Bank Secrecy Act rules. And finally, lawmakers and their families are barred from profiting from stablecoins. However, this ban does not currently extend to the president and vice president. How convenient. And that's a very broad summary of the Genius Act. The reason why this is important is because now there's a regulatory framework in place, and there's more clarity for the players that are investing in this space. They now can be a lot more aggressive with their investment and develop this ecosystem. On the back of this act being passed, companies have been on the move. In this video, I'll be mentioning Coinbase, Circle, and big retailers like Amazon and Walmart. Before we go any further, make sure to like this video and subscribe to the channel to support it. Every week, we release new content on long-term value investing. We talk about high-quality dividend stocks. So if you're interested in that, make sure to subscribe and stay tuned. Okay, so the first company we're talking about here is Coinbase, and Coinbase last week released something called Coinbase Payments. And essentially, this is a platform for e-commerce retailers to be able to accept stablecoins seamlessly. To be more specific, we're talking about USDC, so that's Circle's stablecoin. And here Coinbase makes it really easy for retailers that use Shopify or Stripe to accept USDC for payment. The way this looks like is that in a traditional payment stack, the money flows from you, the customer, to the Visa Mastercard network when you enter your card information. It sends a signal to your bank, which is called the issuing bank, and then the issuing bank sends the money to the acquirer's bank, which is also called the merchant bank, and then that money ends up being available to the merchant. In this new payment stack that is pioneered by Coinbase, the money flows a little bit differently. And as you'll notice, there are less steps involved. So the money flows directly from you, the customer. You input the information on your USDC wallet, and then the money flows directly from your wallet to the merchant's wallet. The flow of money here, when it goes from your wallet to the merchant's wallet, does not use traditional rails like Visa or Mastercard. Instead, it's done on the blockchain using Ethereum or Coinbase's own railways that are on the blockchain. So this completely cuts out the big banks and Visa and Mastercard. And the question is, why would any merchant want this? Why is the Coinbase payment stack more preferable to the traditional payment stack? While there are a few drawbacks, and we'll get into that later in this video, there are many benefits. The first being that payments are accepted instantly. So it takes a few seconds for the money to go from your wallet to the merchant's wallet, and that money is available in a few seconds. In the traditional way, money is only available after 1 or 2 days after the funds are completely settled. So this makes a big difference for the working capital of these businesses. The second big benefit is that the fees are just lower. There's no interchange fee that is split between the rails and the banks. And so the fee goes from 2 to 3% all the way down to 0.5 or less. On one transaction, this doesn't make a huge difference, but when you're processing millions and millions of transactions, this is life-changing money. Since the Genius Act was announced, Coinbase stock is up 36%, so investors are happy, the market is happy, and people are expecting great things from Coinbase. The second big beneficiary from the Genius Act is a company called Circle. This company might not be very well known, but it's actually very important in this new age financial ecosystem because they're the issuer of USDC. This is the company that holds all the US dollars and the US bonds that back the USDC coin 1-to-1. USDC is the world's largest regulated stablecoin. It's used pretty much ubiquitously in e-commerce today. And until recently, this was Circle's entire business model, issuing USDC and maintaining US dollars and bonds on their balance sheet. And pretty much their entire profits and revenues came from the interest on these dollars. In other words, Circle was pretty much a treasury company. But things changed recently and became quite interesting because now Circle is launching the Circle Payments Network. With this network, Circle is targeting banks and remittance firms like Western Union. The entire purpose of this network is to allow for cross-border settlements using USDC. And just like we saw with Coinbase, this network allows for big benefits when it comes to the movement of capital. First of all, it's a lot quicker than the traditional method of using Visa or the Mastercard network. It's quicker and it's cheaper. The way it works is that it converts the local currency in country A into USDC. Then it sends that USDC across the border to country B, and then it converts the USDC to the local currency in country B. Voila, it's that easy. Just as important, this network is built on top of public blockchain networks like Solana and Ethereum. And what that means is that all of these transactions that are cross-border are auditable and they're trackable. And finally, unlike Visa and Mastercard that are private networks, Circle's network is programmable. And that means it's developer friendly. That means it's entirely possible for software developers to build apps on top of this network very easily. So as you can see, there are quite a few benefits from using this new Circle payments network, and it's probably going to give some banks something to think about. Circle IPO'd at the beginning of this month in June of 2025. Since that first day, the company's up 200%. The market is extremely bullish, extremely excited about this. And finally, we have big retailers wanting to get in the mix because, yeah, they just couldn't stay out of it. They're some of the biggest beneficiaries from the Genius Act if it were to pass. Remember that these retailers like Amazon and Walmart are the ones that end up having to pay the most in interchange fees. These fees go to banks and to the traditional networks like Visa and Mastercard. So it's not the first time, and it probably won't be the last, that they try to cut out the middleman being Visa and Mastercard. So these two companies that see some of the most transactions out of all the businesses in the entire world are trying to issue their own stablecoins. And if that's not possible, maybe use a third party stablecoin like USDC. So, how does this all affect Visa and MasterCard? Are these two companies doomed? The short answer is no, not at all. At least not for a very long time. Because the reality is that the Genius Act also provides clarity for these two as well. Now they'll be able to invest really aggressively into all this new payment infrastructure just as much as all the exciting fintechs, if not more than those. Because at the end of the day, Visa and MasterCard produce a lot of free cash flow. And as a matter of fact, they've already been investing for a very long time. Visa has been dabbling with stablecoins for a long time. They're already transacting in USDC on their network using Solana and Ethereum. And same for MasterCard. A while back, they launched this MasterCard multi token network in order to be able to transact with digital tokens, in other words, stablecoins. Visa and MasterCard are positioning themselves as agnostic rails. They don't care who wins. If it's the banks, if it's the fintechs, you'll be able to transact no matter what currency on their rails. And as of right now, they're already processing trillions of stablecoins each year on their rails. So it's not like MasterCard and Visa are standing still and resisting change. That would be quite scary as a shareholder. I would not want to see these companies that I'm investing in downplaying this risk and this new threat coming from the fintechs. Instead, what Visa and MasterCard are doing is exactly what winning companies do. They're leaning into the change and being the leaders and investing and creating all this infrastructure. Another thing about Visa and MasterCard is that these are very high quality companies. They have extremely wide moats. Actually, Visa and MasterCard are two of the companies that have perfect scores on rated A. If you want more details and the full analysis for these companies, it's available at rateda.co. I'll leave the link in the description below. But for now, all I'll say is that this mode is just incredible. And the centerpiece of that mode is the network effects. Visa and MasterCard are already present in more than 200 countries worldwide. They're widely accepted by merchants. The brands Visa and MasterCard are already trusted by consumers. People don't think twice. They'll pay with their Visa or MasterCard knowing that the money is safe and will reach the other side of the transaction. And let's not forget where Visa and MasterCard came from in the first place. This is an invention that came from all the banks worldwide. So, in a way, when you're taking on Visa and MasterCard, you're taking on the system. And as we know, that's always easier said than done. At the end of the day, even if a fintech with a new blockchain network appears on the market and is a lot faster and cheaper, it doesn't mean that all the transaction volumes are going to switch to that. Right now, all the banks in the world and a lot of consumers worldwide are using these incumbent networks. It's not going to switch in the snap of a finger. People are paying for their subscriptions without even knowing it using Visa and MasterCard. People tap their phones everywhere to pay, and that uses Visa and MasterCard. In finance, there's something called inertia, and that means that once people get used to one thing, they're more likely to stick to that. It's hard to make changes, especially when it comes to financial habits. Even if a new fintech came onto the market and presented this beautiful blockchain network and started taking share from MasterCard and Visa, you would see it in the financials. You would see it in the numbers over time. It would take decades and you would see it little by little, but you would have time to actually sell these investments if the time came for that. One more thing I want to highlight before I end this video is just the massive difference that there is between the incumbents, Visa and Mastercard, and the new fintechs, which in this case would be Coinbase and Circle. From an investor's perspective, which company would you rather buy today? A high quality company like Mastercard selling for 37 times its free cash flows? A very high company like Visa selling for 29 times free cash flows? And then you've got Coinbase selling for a market cap of 87 billion with free cash flows that are up and down every single year, the latest year being about 2 billion. So that's around 40 times free cash flows. And finally, we move on to Circle with a market cap of 60 billion with free cash flows of 300 million. So that's a multiple of around 200. When you consider the market positioning of these companies and you consider the moats of these companies, we already saw who's more likely to succeed. You have to think in terms of probabilities. At the end of the day, nobody knows how the chips are going to fall. Nobody knows who's going to be the winner in this new era of financial ecosystems, who will have the dominant network and all that. But what we do know is that investors and the market in general are a lot more enthusiastic about companies like Coinbase and Circle. They're pricing in a lot more growth for these companies and less so for Visa and MasterCard, companies that have very strong moats and are very highly rated when it comes to quality. Myself, as a long-term quality investors, I'm always going to be leaning towards the higher quality companies, the Visas and the MasterCards of the world. Visa and MasterCard are in enviable positions when it comes to this new possibilities in the financial ecosystem. And if these companies keep dipping, I'll definitely buy more as the stocks go down, as long as the fundamentals keep looking good. All right, that's it for this video, and I'll see you in the next one.